Hello, welcome to Jazz After Dark. Put that back on, right? Hope you're having a good night here tonight. We are going to give a little tough love tonight. I think sometimes that's warranted. You know, you kids these days, you're not as tough as we were back in the day. You know, when I was a kid, I died when I was 5 and my mom told me to walk it off. That's what I'm talking about. I don't know, I just thought of that. Anyways, I'll be joining you here tonight with some Spirit of the Oak. I lied to you. I was going to do the Flaviar thing. We are on our final glass. We were supposed to do the Balcones Texas Pot Still Bourbon. And you know, it's so good, I had to wait. So I'm doing Spirit of the Oak tonight. It's very, very good. Nowhere near the Balcones, by the way, if that's how you say it. That's one of my favorites. Even my wife was like, wow, that's like spot on. Hopefully you've had a little something to drink as well, because you can usually handle the tough love at that point. And I'm going to start this by saying, of course, we're financial advisors here at Jazz Wealth, the name of the company. Always got it on my shirt. And sometimes that's my job. And I'm not mean, but sometimes it's my job to say, what are you doing? That's silly. Come on. You're making emotional decisions. You're getting worried about something. And I like to back it up with stats. Because, you know, if I can back it up with stats, then it's taking my opinion out of it. And you're not just hearing from somebody saying, there, you know, it'll be fine. So that's why I focus so much on stats. Well, we're going to go a couple different ways here, and this won't be very long, I promise. The first thing I want to do is I want to talk about when you make an emotional decision and you move a stock or a portfolio after already being down, you now realize you have a larger gain to make. This is something, it's always been kind of popular, but for example, if your portfolio falls 5%, you need just above a 5% rally in order to get back to whole. The further it falls, if you start making stupid decisions, the more you need a rally, first of all, to get back to even, but in addition, get back in the position you were in. So for example, if you fall 20% and you didn't do anything, you would need to see a 25% bounce in your portfolio, stock, ETF, whatever it is, in order to get your dollar amount to be the same. $10,000 falls 20%, you need a 25% rally to get you back there. And if you're like, whoa, I've never thought of it that way, do numbers. Take $10,000, subtract 20%, you get $8,000. Add 20% to $8,000, and what do you get? $9,600. It's not quite there. So a lot of times people will share this sort of screen, but now you understand where I'm coming from. Where I really want to argue with you here tonight, I'm in a fiery mood. I want you to start looking at some of these downturns. Because when your portfolio falls 20%, a lot of you will think, maybe I should do something. Well, if you do anything, you better be moving into something faster than what you went on the way down. Okay, you hear what I'm saying there? So if you fell 20% with the market, let's say, you better be moving into something that will rally faster than the market will on the way up. That's really difficult to do. But I'll use the analogy. Let's say you're in a dividend position, mutual fund, ETF or something, and the stock market just falls apart here, kind of like it did last year. Falls apart, and the market's down 20, you're down 15. And you go, oh my God, I was supposed to be a dividend position. I don't really like this. I'm not going to get 15% in dividends in a year. This is kind of ridiculous. If you make a change, it would be to something index related, growth stock related, sometimes international, just depends on where you're at there. Maybe a more aggressive dividend fund. You would not take your dividend position that's down 15% already and move it to a money market fund, right? That's going to make 3%. See, because then now on the way back up, you're going slower. So you made the emotional decision to slow down after you already fell. That's not a good thing. We, as we got through 2018 and 19, we said, these portfolios are doing way better than the market. We manage our own portfolios here. And we said, this is crazy. Either A, I could let it be that way and clients will just think I'm magic, Or B, I could start slowing down while we're going up. There's a thought, right? I could bleed back the performance then. So then when we fall, we won't fall as much. Now we sort of look like heroes, but it's only because we didn't fall as much. A little secret between us there. So first thing I want to share with you is this. Do not move to something slower after you've already fallen, because you already have an uphill battle to get back to where you're trying to be. Just depends on how far you've fallen, right? Thankfully, most of our declines are in this range right here. We don't often see 90% declines. Well, individual stocks can see that, of course. Credit Suisse. But you get what I'm saying, right? Portfolios don't typically fall that much. Now, I say that because the market hasn't even fallen. Here's the tough love part. All last year, the stock market went down over 20%. Most people didn't even notice. They're like, what are you going to do? It's the market. I'm having a bad year. But now, in just the last few weeks, the market's actually positive. But people are like, doom and gloom, doom and gloom. The banks are going down. I want to buy gold. But, okay, so there was no performance to get you to make that decision. But there's the perception now. Recession, slow down, banks failing. Oh boy, government's going out. Oh, that's the end of the United States. Buy gold, right? So I know that's an emotional decision because I don't see anything here that says the economy's going to hell or the stock market's falling apart. It's just not happening yet. The economy could slow down. I'll give you that. The stock market's like, no, it's just fine. So what are you doing? You're making an emotional decision after you've already fallen, because last year we fell, this year we're starting to bounce, and you're like, no, that's it, I want out. Does that sound like anybody out there watching? Do you know somebody that's doing that? I made the joke earlier on the closing beat that when I took you might see the FAR aim back there, when I took my private pilot exam, the DPE or the examiner, it's literally a person that goes along with you and tries to get you to do everything you're supposed to do and make sure you do it safely. He asked me a question, and he said, I forget what it was. Where are you planning to land, for example? I don't remember the question. I remember his response. But he asked me a question. I guess it was the wrong answer. I said, I'm going to do X, whatever it was. And he said, that's literally the stupidest thing you could do right now. And he said it just like that. And I was shaken, right? Because, you don't want to hear that from an examiner, someone that holds your license in your hands. And so I jokingly, I was just kind of like, well, no, I mean, you could do that. I'm not going to do that, but someone could do that. What I'm going to do is, and then I guessed at whatever the answer was, and he chuckled about it, right? So I use that example to say, if you're making a change right now, purely emotional, shame on you. That you're being ridiculous, and that's the tough love, because there's nothing that says you should be doing anything. You certainly could slow down your investments if you are close to retirement and you already have some of your cash on the sidelines, all this stuff that falls into play that you should have already been planning about. And one more thing, this is the other data point that I'm going to add here, because I don't like to be negative. You don't often see me get mad or something. I always joke about being mad or whatever. Stock markets bounce in a recession. That's a fact. There's no, guess about that. I've shared that data with you so many times. So let's say you go, yeah, but Dustin, a recession, the Fed's going to raise rates to a point where it causes a recession. All right, I kind of buy that. But if you're going to do something because you feel there's going to be a recession, you're already wrong. And that's just it. There's no way you can argue it. Here is the market's performance, both average and median, so there's no argument here, around a recession. So here's what we did. We said, now that we know, since this is history, we can actually go and timeline the performance of the market. So we can say in every single recession, not just a couple of them, every single recession that we have, that we can track since 1932 with the stock market, the S&P, that's when it became the S&P. We can say, what was the performance so many days before? We went all the way back 256 days. Oh, yeah, we're moving along. Everything's fine. All of a sudden, what happens? This is the official last day of what would have been considered the expansion. In other words, we're pretending like we were back there in time and we knew what the future held. So we obviously now know what the future held because we can look back. We then said, okay, let's take the average performance leading into the recession, and let's take the median performance leading into the recession. In other words, before anybody had any thoughts of us being in a recession, what did the market do here? Look, it already fell. What happened last year? The market already fell. Of course, it could fall more. I get the arguments. I'm not trying to be one-sided here. But it already fell. What happens after the markets fell and we go into a recession? It's too late. We're already in the recession. The market's recovering. The stock market and the economy are two different things. What's happening right now? The stock market, oh my God, why is it going up? Everybody's asking that question. Why are tech stocks doing well? Consumer discretionary stocks are doing well. This is crazy. Consumer staple stocks, which are supposed to do well if you're going into a recession, nothing. They're not doing anything. I look at this every day. This is literally my job. Healthcare stocks, one of the most oversold sectors in the S&P right now. If there's supposed to be a recession, those guys should be doing well. Consumer staples should be doing well. Your tobaccos, your alcohols, your Krogers, for God's sakes, right? And by the way, fun fact, Target is now a consumer staple. So anyways, what just happened? So let's have some fun with this. You see the markets move down last year and now you're thinking recession. We've already put in a low last October. We're starting to bounce. Everything's going fine at the moment. And you say, I worry about this stinking recession, Dustin. I would like to take some money now that I'm already down and I would like to go into gold. First of all, I won't laugh at you to your face, but I'm genuinely laughing, and the kind where you cry at the same time because you're like, I can't, I don't know why. Where did I go wrong? My kids, my students, where did I go wrong? But what you're doing, you're saying, I want to go to gold. Historically, way underperforms the market. Yes, you can cherry pick some time periods. I understand that. But you're saying, I want to go to gold. Oh, by the way, it's already gone way up here. And now I want to buy it because I'm fearful of the recession. What just happened? You just got out of something you needed to recover more and you went into gold when the market's already leaving you in the dust. That is the second worst feeling in the world. If you're a guy, you know what the first worst feeling in the world is. I don't have to tell you that. So, a little bit of a rant tonight, but for goodness sakes, make decisions based on stats. Make decisions based on your plan. What are you trying to achieve? It doesn't have to be retirement. We focus on that a lot. But it could be like earlier, I was talking to clients, young couple, want to buy an RV park. Not my thing. I have family that is into that sort of thing. I'm just not into it. But it's like, okay, that's your goal. That's what we're shooting for. No stupid decisions. I can't let you do it. They had a few thoughts about what they wanted to do. And I'm like, no. I'm not saying you're dumb because you didn't know any better. But here's what you want to do. Now, if you do something different when I just proved to you that you could do better by going this way, that's your thing. That's not my money. But make decisions based on stats and actual knowledge. Doesn't have to be you learned from me. Go learn what it means when SVB Bank failed. It really meant nothing. I wrote a letter to clients, spelled it all out. I'm like, this is what happened. This is not bank failures on a global scale. This is just not going to happen. We spelled it out. Instead of watching TV and seeing, ooh, some bank that I don't think I've ever heard of that's over here on the other coast of the country. Something's happening. I see bank failure contagion. I'm worried. Let's make some changes. It's going to cost you. It's going to be costly, right? So tough love tonight. You can handle it. I'm pretty sure you can. Maybe it's the Texas whiskey I've been drinking. I'm from Texas, so I have a little bit more of that sort of, frustrating, kind of pushy attitude sometimes. But I mean it from a good place because, and I mean this because this channel doesn't grow unless I help you grow, right? Because why would you come back? My business, Jazz Wealth, we are financial advisors. We manage $300 million. We don't grow if the accounts don't grow. That's our business model. We don't charge flat fees or anything like that. Your account goes up, we go along with you. And so I can't have you making stupid decisions. If you're not a client, of course, you're going to do what you're going to do, but I want you to do well. It means you'll keep watching. So there's this shared benefit in both business and in this channel. So please, if you feel like you're going to make a stupid decision, you're welcome to just send an email and just give me the confessional. You know what I mean? I can't give you advice if you're not a client, but I'm happy to just send you back like the smacked emoji hand or something. Do they make that? I'll have to check that out. I know they have like thumbs up and stuff, but yeah, I'm getting old. Okay. You guys enjoy the rest of your evening. And if it's your first time watching, I'm a nice guy. I have everything that I'm happy to live for, and I have nothing that I'm usually angry at. Politics will get me going sometimes because I have, beliefs that we should accomplish things in the world. But yeah, that's not the topic for this channel. Want you to grow, get your dough straight. That's why I always say, get your dough straight. It starts by making smart decisions. All right, enjoy the rest of your evening. I'm going to go chill out and relax. Maybe a little outside fire. Kind of cold here. All right, we'll see you tomorrow.